Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Momentum stocks, the topic of this conversation with Mike Vodicka, our momentum stock analyst at Zacks.com. Man, we've got a couple of names here. Well, one that is very recognizable, but I know this one. I don't know how many people would know 51 Job Incorporated, maybe more today than used to.
Yeah.
JOBS, the ticker symbol. Human Resources.
Yeah, this one is kind of new to me. It's a human resources a company. They outsource human resources services to them. It's a company out of China, and we've been talking about a lot of Chinese companies, Chinese stocks lately because the Chinese economy is basically booming. Just the other night, which was Wednesday, January 20th. China posted fourth quarter GDP growth of 10.7%, which is like a gangbusters number. So the Chinese story for the time being is still intact. And this is kind of a playoff of what we're seeing over there, really. Actually, just to give you a little more background, the company was founded in 1998, so they've been around for 12 years. They have a pretty good history. It's not really a Johnny-come-lately Chinese stock, so to speak.
Right.
And they have a market cap of $482 million, so it's not really a huge company, a little bit on the smaller side.
Yeah, but a decent market cap.
Yeah, decent, you're right. The third quarter results the company posted on November 23rd were pretty solid. We saw revenue growth year over year, not crazy revenue growth, but 5% from last year, so that was solid. And then on the earnings side, we saw earnings of 19 cents per share, and that was 12 cents ahead of the Zacks consensus estimate. So they had a nice beat on the earnings side. And they saw some really nice growth in their online recruiting services. The revenue in that segment was up 16% year over year. That's their largest business segment, to about $13 million. Their print division was down a little bit. It's kind of in line with just the macro level trend of people searching for jobs online as opposed to using traditional communication means. Mm-hmm. They also saw some nice gross margin expansion in the quarter. Gross margin jumped up to 62.5% from 53% last year, so that was a really nice gain. They've initiated a share buyback program. Shareholders approved $25 million for share buyback last year. The third quarter, they bought back $3.3 million, and that brought their 2009 total to about $7 million. So they're buying back their shares. That's a good sign from the insiders.
All right.
Shares aren't really cheap right now. They're kind of expensive. They're trading at 41 times the current year estimate, so that is a little bit pricey. They do have the nice next year growth estimate of 31%, so that's solid. And then the last piece of the puzzle, of course, would be the chart. And we've seen some nice movement on these shares in about the last 6 months or 9 months really now. But they bottomed out with the overall market in early March at $6 and recently topped off at $20. So it's up more than 200%. So some pretty nice gains.
All right. And a lot of people will recognize this name, Lazy Boy, LZB, the ticker symbol. We all know what they designed and manufacture.
Yeah.
And probably all have one in our house or have had at one point in time.
Yeah, I'm sure most of our listeners are familiar with Lazy Boy. It kind of surprised me that this came across my screen because right now we're in sort of a weak consumer environment, and you don't really think of companies like this doing well. But Lazy Boy is a really strong brand, and what they've done, which is what many other companies have done, they focused on cost cutting in order to bring their results in the line 2009. Mm-hmm. The company's been around since 1927. So they've been around for a while. They have a nice history, and it's kind of a similar market cap to Job 51 of $550 million. So a decent-sized company. Mm-hmm. But of the company's third quarter results we saw in November, the sales were basically flat year over year on the revenue side, but they did beat on earnings per share of 12 cents. That was 2 cents ahead of the Zacks consensus estimate. And basically, the way they got there is through cost cutting and operational efficiencies. The company did announce that they were going to be exporting their cutting and sewing division to Mexico, and that was going to create 840 jobs and save them $20 million a year, so that's nice cost saving for them. Their next year estimate is projecting 91% growth in earnings. So next year, the analysts are bullish on their earnings projections, so that's a nice omen right there. Shares are a little bit expensive, 25 times current year, 25 times forward PE multiple right now. A little bit of a premium to the market, but still fairly reasonable. And we've seen big gains in Lazy Boy. Some of the consumer-oriented stocks really got hammered last year, bottomed out at about $2, and then recently crossed the $10 mark. So pretty big gain there too.
All right. Do you own either of these two?
No, I don't.
Check out more Zacks Rank Buy stock pick ideas for you in the upper right-hand corner of Zacks.com. That's our homepage. We put 4 new stock picks up there for you each day, 1 in each of the investing categories that we write about. Mike's category included, momentum. With Mike Vodicka, I'm Terry Ruffalo.